Hey traders, Jason with Day Trading Fearless. In this video, we're going to talk about ICT Fair Value Gaps. Okay. First, we're going to talk about what they are, and just a quick shout out to ICT, which is Inner Circle Trader. Great content. I would definitely say go check out his content on his YouTube channel. He's the guy that kind of created this fair value gap concept. It's amazing how well it works and all that. But before we jump in, do me a favor, hit the like button, hit subscribe, and let's jump right into it. Okay, so first off, number one, it's an imbalance in price. Okay, and what I'm going to kind of go through this, and then I will show you guys on some charts, and we'll dive into real-time charts and find them. And there are tips and tricks that I think will help explain when to take them and when not to. Number two, it indicates aggressiveness created when price leaves a range quickly. Number three, price will seek to return to the fair value gap to rebalance and pick up unfilled orders. Number four, it is a 3-candle pattern. Number five, it is identified as the area where the wicks of the first and the third candle do not overlap. That's one of the most important things, right? That's what we're going to look for. And then number six, it can be found on any time frame. So it doesn't matter if you're trading a 1 minute, a 5, a 15 daily, hourly, monthly, it works on all time frames. Okay, so fair value gaps and imbalances. Okay, so we could see right here, okay, in this box right here, okay, is a gap of liquidity, fair value gap, left during the move down in price due to no buying pressure overlapping that part of the move in the previous or next candle. Okay, the key point in identifying these fair value gaps is that the gap is only calculated by the impulse up or down candle and the candles on either side of that move. Everything else does not contribute towards the gap, right? So think of it as just like a regular gap fill in the overall market, right? Where a gap kind of the price closes here, or sorry, makes a low here, and then this gap, just a lot of selling pressure, right? Just sell, and then we close down here, and then the high of this gap only makes it to this level. So you essentially have all of this, right? Or all of this that has not been back tested and back filled, if that makes sense. Think of a stock chart, right? It goes like this in a trend, something like this. Well, you could see every high has been back tested, right? Where price goes up, comes back, fills in that level. Well, we're essentially looking for the same thing with these fair value gaps. These pockets of liquidity are important and can act as strong entries as the market is drawn to liquidity, meaning that when price is planning to move down, it wants to clear the liquidity above it beforehand. In turn, making the liquidity pocket themselves a great entry before the move down, and vice versa with moving up. Now, real quick, want to give Tens Wiener a Twitter prop. I kind of took this from him, so just want to make sure I give him a shout out. Check him out on Twitter, some great information. But with that being said, essentially it's a 3-candle pattern, right? So we have the first candle here, the second candle, and the third. And what happens is all we're looking at essentially is the first and the third candle, and we're looking for the gap in between the second candle, right? We see the same exact thing over here, right? We kind of see 1, 2, 3, these 3 candles, the wick high here, the wick low here, but yet the body or the wick never comes back in to fill any of this area out. And so what will happen is price will eventually come back within here, fill this, and then it's completed, and then it can continue its trend higher, just like I gave you with this example, right? As we're trending higher or lower, you always see price usually come back down and retest and then go higher. So here's another example, right? 1, breakout, make a high. Okay, then we pull back, we close, we open here, we move all the way high, and usually you'll see this middle candle is going to be a very strong, relative, straight up, think of it as a rocket ship type of candle, right? We close near the highs. The next candle is kind of like, it goes higher. It could be an inside candle, but it doesn't backfill into any of this area, right? And so what happens is later on, we want to see price reverse, come down, and fill in that area. If you want to help support my channel, get some trading education, and also get weekly S&P E-mini trade zone levels, support, and resistance, then you need to sign up with my $99 lifetime subscription, one-time payment of the S&P weekly trade zones, where you will get support and resistance levels, any open gaps and VPOCs, and you will also get a 7-hour video course of my top 5 trading strategies that I go over, that I use on a daily basis. Also, as a bonus, you will get over 30 free Thinkorswim custom indicators and charts, and you will get on a weekly basis every weekend Thinkorswim share chart, so you can upload the drawings directly to your charts. If you use another brokerage firm, here are all the levels that you'll be able to draw your own levels on. So make sure you check out daytradingfearless.com to sign up, or the link down below. Again, $99, but back to the video. And then for the last slide, higher time frame, right? Look at this gap fill, or right here, right? So we see the high here, and then we see this huge rocket ship, right, of a candle, and then we see this next candle, the third candle, just kind of go sideways. So what we have here is essentially a gap from here to here. Okay, and we're going to be waiting for price to come back into this level, and then that is somewhere where our buy target is. Now, I'll show you another really good example is right here. Look at this move, right? We have 1, 2, 3. Okay, well, look at the low of this candle, this first candle here. Okay, and then we have that big impulse move lower, and then the next candle is kind of a small candle, and so now we have to come back and fill in all this. And what happens is price continues lower, and then we bounce. As we bounce into here, then price moves back, and you could see we finally come all the way back up to here, and then price rolls over. So hopefully that kind of makes sense, but let's jump into the charts now. Okay, so we're now in the S&P 500 charts, okay? And this is what I like to look for. And it usually is a pattern, a head and shoulders pattern that's starting to form, or at the high of a move. But where I find real value is when we come in to an actual trade zone, okay? So let's say I drew a trade zone like this. Let's say this zone was already up, which is, for me, a resistance level zone. Okay, so as price is moving up into this zone, I'm going to look for this pattern. And as we kind of zoom in, it's probably a little too much. What I want to show you guys is as we come into this zone, right, we make a high, pull back, right, and then we make this higher high. And let's remove this for a second. And look at what happens, right? We make a high, but then we have a big reversal, right? We kind of open here, and let's zoom right into this area of the candle. What happens is we open here, we just take off, right? Make new highs above a prior high. So we'll call this like a liquidity high, a prior high. And everybody's trapped up here now, okay, in this level. And then what happens is we come all the way back down. So this is what's called a liquidity grab, kind of buy-side liquidity grab, where everybody has stop orders to get along the market, looking for this breakout higher and continue trend up. But what happens is, I know this is an area of resistance because I've drawn my zones, right? And so what we have here is we have that big move higher, comes back down, the very next candle, okay? We close here, open, kind of come over here, and then we have this huge impulse move lower. Pretty much it never back and filled, and I'm on a 1 minute chart, right? So there wasn't any back and fill of this candle, right? Just kind of a big impulse, massive sellers coming in. And then your next candle closes, we close here, we open here, and we go all the way down, and then we come back up. Well, what we have is remember, it's a 3 candle pattern, and what I look for, and this is probably the most important thing, a move at the high or a move at the low into either a support, resistance, or what I would deem a trade zone or a supply and demand zone, okay? And what we're looking for is this area right here. See how I drew this, right? Because it's the low of this candle, the high of this. So we have all of this area that needs to be filled, okay? And so what happens is this is, as we're down here, okay, we come back up. What I'm looking for is an entry somewhere within this level, okay? So if we extend this to the right, somewhere within this range, I'm going to look for an entry. So let's just say for this example, I'll go 50% lower, right? So let's say I finally get filled right here. Well, where does my stop go? Normally, you want to put your stop above the first candle, right? So we have 1, 2, 3. Remember, it's a 3 candle pattern. So we're going to put our stop right above this high, okay? And one of the things that we're looking for is now, let's say this wasn't the high. Let's say there was one more candle here. You could go here, but I would just go above that high. So whatever the highest swing high is, sometimes, but this is a very clean move right here. And so what I would do is I would put my stop, and let's just say the stop goes right there. Okay, so we now know this is what our risk is on the trade. And then what happens is this is kind of, we should not break above this. And what does price do? It comes up, it fills us, it goes down. We're up in profit. Remember, our entry's probably somewhere right around here, about 50% through this zone right here, because we're not going to nail it every time. A lot of times price will come right here and then fail. Sometimes it'll come up a little bit, then fail. Sometimes Sometimes they'll go all the way through or even higher. So it's one of those things, as you watch, you'll learn, but somewhere within this zone is your short. We know where our stop loss is above. And then let's look at what happens on this trade. Okay, and so we kind of go up and we chop around, and we're up a little bit, down. We're okay. We know where our risk is. On this, we're risking, let's say we enter 4,000. Our exit is 4,004. So we're risking 4 points on this trade. We're okay with it, right? It's a defined risk. We're okay taking this much risk. If it's 1 micro, $20. If it's an E-mini, it's 200. Okay. And let's see how far down this moved, because remember, this was a major resistance level that from a prior high, right? So we failed from here, coming back, very first test, right? Up into this. And so we want to look for a short, just anticipating, hey, we're either going to be right or right out of the trade, right? But it's a trade zone. Again, check out my video course if you want to learn more about how I draw my trade zones. I teach you everything in there. But price goes, and then we collapse, and the shorts just come in and hammer this thing. Right? So if we kind of zoom all the way out, look at this. Just 4 points of risk would have gained you, man, you could have gotten all the way down here, 93 or 39.43. Okay, so you had 4 points of risk to make 60. Now, what do I look for? I'm looking for anywhere between 2 to 3 reward versus risk. I know a lot of my other trading, it's a quick scalp, but this is a different type of trade that I'm starting to play around with this bigger volatility. Remember, as the markets change, we must change and evolve with them, right? But we will see these a lot of times. Now, how else could we make this strategy a lot better? Well, guess what? Let's take and grab our stochastics, right? Let's grab a fast stochastic. Was there divergence up at this level? Right? Remember, and if you guys know all my stuff, yeah, there was, right? Look at this divergence right here to here, here to here. Okay, so we now have our divergence. Well, think about this. This moved back up if you followed my divergence, right? Again, I also teach the divergence in the video course, but this is our kickback. We're just kicking back into this level. Okay, and then we have the complete collapse of it. Let's look for a few more, right? On the downside. So we have and normally you want to see like lows, right? So we have a low here, but we really don't have any fair value gaps down here, right? They all keep getting filled. Think about it, right? So we have the high here, even from this gap or this candle high to that candle low got filled. It retraced. Same thing here, right? So this is fairly clean. You could say there's a gap here. Okay, a fair value gap from here to here. But here's the problem. We're not at per se the low, right? We want this thing to be way down here near the lows. So this is also a very patient type of a trade. Now, we have another key of all this really working out is you want to see price start to kind of make lower highs, right? Kind of break below. So right here, we're making a low, a high, higher low, right? And then we finally break down here, Okay, so here's a good good one. We have 1, 2, 3, right? So we actually have a fair value gap here, right? Because we see the trend actually break below. So we have a high, low, lower, high, lower, low, and then we come back in and it pulls back, but the market was very strong, right? So these are the patterns that we're looking for. Look at this even, right? Here's another fair value gap, 1, 2, 3. Okay, or I would probably call this one. I'd say this is more of the fair value gap, but again, the market was very strong, right? Your stop would have gone above here. So you also have to take into context the market. Look at the trend, right? Also, none of these were resistant levels. Right? Think about it. This was all open air while we were making this. This here would have been our resistance level somewhere over here, right? But now we're above it, and do we really want to take these? No, because we're in open air, right? So these are things that you'll learn as you're watching, but essentially you want to find these at the highs or lows of a move within a or with a divergence in a trade zone or a supply and demand zone or support and resistance zone. So hopefully this video really helps, guys. I would definitely check out Inner Circle Trader. His content really great and amazing content. It's amazing how well these levels work when you actually know what to look for and how to trade them. They could be some very, very valuable things. Here's another one real quick, right? Look at this. So we have a low here with divergence, right? Kind of see this divergence here, and then we have this huge up candle and a small. So think of it as small, big, small, right? And here is our fair value gap. Price comes back in, fills it, never makes that low, and then it's off to the races with very little risk, right? And think about this is just our kickback of the divergence. So that's what we're looking for. So hopefully, again, that helps. But as always, thanks for watching, and we'll talk to you soon.